There's the concept of gifting strategies. Are there some main typical gifting strategies that you find yourself recommending or implementing more often than others without getting into the esoteric ones?
A good way to start this is by defining what the estate tax landscape is at this time. So your annual exemption is 13.6 million, and that means that anybody can have 13.6 million at death and not pay any taxes. Separate, you have an annual exclusion, which is $18,000 per year you can gift to each person. So it can be more than $18,000. But that amount you can use that doesn't eat up your lifetime exemption or that $13.6 million. So there are a couple of strategies that we can implement. Certainly the first one with that annual amount, it's $18,000 per person. So a couple can gift 36,000 jointly to, for example, each one of their children. So they're able to remove that money out of their estate and transfer it into either their kids' hands directly or into a trust for the benefit of those children, whatever the case may be. In addition to that $18,000 per year being available, it's a use it or lose it in an annual year. So you can make that gift each year, but only once per year per person, again, per gift. What that means is that if you hadn't used it in the last 10 years, you can't reverse time and say, I want to go make gifts for the last 10 years. You've lost it, but you can certainly make one in the year that you're in and moving forward. So it's an important distinction to use it or lose it for that piece. For people that don't have an estate tax problem today, they may have a significant tax problem in the future. And so there are some strategies that we've been able to implement to do that. One of the things is transferring money out of your estate, taxable estate, elsewhere. And one of the elsewhere places can be into an irrevocable trust. By doing that, what happens is any assets that I transfer to that irrevocable trust and I'm giving up some control over, the government will allow all of that appreciation to occur outside of my estate. One of the things that we see is pretty common is instead of using assets like a piece of property or a cash account, individuals will leverage the treatments of life insurance, the tax-free benefits, the fact that it costs a dollar for dollar less than to submit $1 into a trust might buy you $10 of insurance coverage. We look at strategies to see, based on today's environment and what we know about the future, for an individual that may not have a problem today but may then, we can look at purchasing insurance. One of the additional things with insurance, some people unintentionally have the insurance in their estate paid either to their estate or somebody there. One of the things that can be a problem is it will sometimes unintentionally be added to their overall gross estate. We want to be sure that any insurance policy that we create or that's already established is moved outside of the client's estate.